Let's look at a bullish example. Okay, now two things we're looking for: either a reversal candle at the low. This is when you can't catch the very low candle, okay, because you're always letting that first candle pass. So this candle right here, it's a bullish reversal candle. Okay, why? Because it opens up here as the candle's actually trading. It opens and it's a full down close candle, right? Red candle. Then it reverses and ends up closing bullishly. Okay, we let this candle pass, and what do we expect when it's a bullish reversal candle? We do not expect this low to get taken. Okay, when we have a long tail into the range highs and lows, you do not expect the low to get taken again, and you trade post that. Okay, this as well, this long tail and indecisional candles with long tails, okay, also those, okay, you don't expect them to get taken after we dig into the range low. However, when you have a full body candle, this is when you can actually catch the very low, because you know that the low is going to form below this candle's low. Okay, that's really important what I said, so just watch that back, okay, and the examples will help as well. Okay, let's look at a bearish high forming. This is a full-on reversal candle, right? It's a big down close candle that digs into a range high, right? We don't expect this to get taken. We trade post that. Okay, when you have these and you're not expecting this to get taken, this is when you take an entry at the order block here. All right, reversal candle, indecisional with a long tail into the high. You don't expect this to get taken. You take the same type of entry here at the order block. Versus when we dig into a high or low and we're full body closing, or we're not a reversal candle and there's a tiny tail here, you still expect the high to get taken again, and that's where the high will form. So the common understanding is that if we're closing above highs and lows, market structure will tell you, well, we're breaking it. This is nonsense. Okay, that is actually when you can catch the very highs and lows, the turtle soups here. Okay, now let's look at some examples to make sense of that. And again, do not take what I'm saying here as the truth. I'm lying to you, okay? Go check your charts and just check the highs and lows at range highs and lows and look at how the highs and lows form. And I promise you, you'll see this, okay? First example here. Okay, we're going to be looking at a bullish example of this. We have a range low here, range high here. We're looking for bullish buys below range lows, right? The order flow is bearish. So what do? We first don't drop time frames. Our range is on the daily chart. We stick to the daily chart. We're going to wait for the first candle that digs into this low to pass. Depending on how it closes, tells us everything we need to know. Full body closure below the low. What does this mean? You expect the low to form below this candle's low, and you can go into a lower time frame now looking for lower time frame change in the state of delivery here. If we're on a daily, you'd want to go to an hourly and you'd be catching the very low of this here. And that's what happens. Okay, once this happens, if you're looking for continuation buys, you see this signature and you anticipate this to be the low. The PD arrays that form post this as we trade higher can be used for buying, because we're not expecting this low to get taken again, because this is how a low will form. And then we have an FVG here, and the market runs and trades up above the buy side on the range high. Okay, example here of a range low to high here. Okay, notice the candle that digs into the range low is a full-on bearish, bullish reversal candle, sorry. Once that candle passes, you're not expecting this candle to get taken. Okay, so you can be buyer here and then post here, you know, at the PD arrays, the FVG, here, 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 etc. Okay, knowing that this is how a low is going to form. Looking at a lower time frame now. Those were daily examples. Let's look at this on a lower time frame range. Hourly range high, hourly range low. Okay, we run up above the range high. This is in recent NASDAQ price action where we've been dropping. Okay, so keep in mind the bearish order flow, like I mentioned in the beginning, is what we are using here to sell range highs. Okay, The candle that digs into the hourly range high, you let it pass. Okay, this is not going to stop you from finding the highs and lows. Okay, it's going to stop you from getting stopped out. That's what's going to happen. Is it a bearish reversal candle? Yes. Do we expect it to get taken again? No. And it never comes back to it again. Okay, like I said, do not take my word for this. Go look at range highs and lows and look at these signatures there. Once this passes here, there's a retracement here back into OTE levels, and we're going to be looking at this range high to this range low here. It's a lower time frame, 15 minute, and we're going to see if we can catch a continuation purge here. And we're going to look at how the candle that digs into the 15-minute range high trades. Okay, so you can see here, we have this range right here. Retracement digs into the range high. Is it a reversal candle? No. Okay, this is a New York session setup. So when we dig into 15-minute range highs, what everyone's doing with the ICT 2022 model especially as well, or just looking for that opposing stop run at 9:30, they're forcing a 15-minute or hourly or whatever stop hunt and dropping immediately to a 1-minute chart. This is how you get wrecked. Okay, you wait for that first 15-minute candle to pass. You see the closure here, and now you know, okay, we're looking for the high to form above this candle's high. As we're running above this high, this is where you're on a lower time frame. Okay, you're waiting for the normal confirmations that you're looking for on a 1-minute chart now above this high. Your lower time frame stop run and SMT, your displacement for value gap, and you're changing the state of delivery on the 1 minute. It's all happening above here. You're gonna see the same thing here. That 1 minute stop run, the FVG forming, whatever, and then you're going to go in and you're going to get stopped out. And then you're going to be there after the market does this and be like, oh, fuck, it happened again. Right? I get stopped out and then it runs without me. This is why. Okay, so you have to let the first candle that digs into the highs and lows pass. Okay, and this is how you can find the very, very tops and bottoms of the market. It's with this signature here. Okay, now to go deeper into why you do not drop time frames, and this is going to help you visualize how it messes up a lot of things in your price action reading. Not just getting stopped out, you won't even know a lower high is forming. So let's look at this hourly range. Okay, bullish one here. Range high, range low. Okay, we dig into the range low. It's a full body closure. So what do we expect? We expect the low to get taken again. Now, what we're going to do is we're going to drop down into a 1 minute chart. Okay, and we're going to look at this low here and we're going to drag it across and annotate it as the hourly range low. And we're going to look at the 1 minute. Okay, let's look at the 1 minute here. Now, if we were reading this live, okay, and you guys didn't have the understanding that you have now from this, and we're on a 1 minute chart here trying to find the low, first, what are we going to be thinking? Well, the market's trading way below this low. It's dying below the low. This low is not going to hold, right? So first, you lose confidence in the trade. You don't even know if it's working. Secondly, right, would you ever see this as a stop run that's going to set the low? It's not even a swing low on the 1 minute chart. Right, so you wouldn't even see this. Why is this a stop run? Why is this where the low would form? It just looks like one random candle. No, it's the specific candle that digs into the range low. We're stop running that candle. Once we take that and we close above the lowest down close candle here, price never trades below this candle here. This is how you catch the highs and lows and how you actually trade manipulation. Okay, and find the lower time frame entries with small stop losses to hold for larger time frame ranges. Okay, and one last example here, because I want you guys to understand that when we have a range and you've got the order flow correct, right, and the drawn liquidity correct, if we dig into a range high like this, do not fall into the understanding of retail market structure where a big move like this above a high means market structure break FVG pattern trading and now we're looking for longs, or this range is broken. This is all nonsense. Okay, if it does this, the same thing applies no matter how big it is. Manipulation is meant to manipulate, right? trades deep into the high. Big body closure. You're letting this candle pass. If you're in here, okay, on a 1 minute chart, and you even have the bias and everything correct, you're going to see a ton of lower time frame, in air quotes, entries here. Stop runs, FVGs, all of those lower time frame entry patterns with the SMT and everything. And you're going to keep getting stopped out. Okay, but if you just let that candle pass that digs into the high and low, you're looking up here for your entry. Okay, this is very important. Okay, and this is going to immediately change your trading as soon as you start applying this. Okay, and I wanted to put this last example in so you can see both of them side by side. This is very recent NASDAQ price action. Both of these are New York session setups as well during the equity open, 9 to 11. 15-minute range high, just your classic 2022 right model, or you trade into the range high, let that candle pass. Okay, it's a bearish reversal candle, that long tail. You can be in here expecting this high not to be taken. Okay, you don't get stopped out here. This example here, same thing, 9:30 a.m. This is the 9:30 a.m. manipulation candle. It digs into the high here, okay, with a full body closure. So what do you expect? You've let this candle pass. You expect this high to get turtle souped, and that's where the high or low will form, and then the market continues trading lower. Okay, I'm going to say it one more time. Don't believe what I'm saying. Go check your charts, backtest this, and going forward, when you're trading stop hunts and range highs and lows, always let that first candle pass and watch how it completely changes your trading, stops you from getting stopped out, and seeing how the highs and lows actually form, as well as getting really tight RR lower time frame entries, holding for the lower time frame, complete range plays. All right, thanks for watching, guys. You can join the newsletter. There's a link in the description. Free content, free market reviews,